Good morning, everybody. It is Wednesday, June 15th, 5:48 a.m. Central Time as I speak here. July corn futures down 6 1/4 at 762. December corn down 6 at 715 1/4. July soybeans down 12, 1686 and a half last trade. November soybeans down 2.5 at 1522 3/4. July Chicago wheat down 4 3/4, 1045 and a half. July Kansas City wheat down 8 1/4 at 1134. July spring wheat down 11 3/4 at 1196 3/4. If you guys are listening on the podcast, appreciate it. If you're on that Apple podcast app, leave me a review if you wouldn't mind. That'd be much appreciated. If you guys are watching on YouTube, subscribe, like, leave me a comment, all of those things. If you'd like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service today, guys. You'll get my morning email before 6 a.m. Central Time every business day. That email includes all my grain marketing recommendations, lots of weather info, charts, graphics. My daily subscriber-only videos are part of this deal. I did a video yesterday, discussed old crop versus new crop corn and soybean spreads, kind of gave you the lay of the land, some historical context, what the implication is in regard to grain marketing. If you guys are interested in this sort of content, sign up today, $50 a month, cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else, I promise. President Biden wants to build grain silos at the Ukrainian border. The president said yesterday that temporary silos would be built along Ukraine's border with Poland and Romania in an effort to export more grain. Biden said yesterday, "I'm working closely with our European partners to get 20 million tons of grain locked in Ukraine out onto the market to help bring down food prices. It can't get through the Black Sea because it'll get blown out of the water. So we're going to build silos, temporary silos, on the borders of Ukraine, including Poland." This plan has very obvious flaws. I don't know that this does a whole lot to relieve Ukraine of all of this grain that's stuck in the country. I really think the only real solution here would be to somehow open these Black Sea ports and get grain moving out of those areas. That seems very unlikely, if not impossible, at this point in time. So I don't know that the U.S. really has, or the West has any great solution to this. I don't know what the fix is. You can't use military force and risk retaliation and a war between Russia and NATO or Russia and the U.S. You can't risk that. So this is just a messy situation. Now, also on the Ukraine front, Ukraine's ag minister says that Russia's war may deprive the world of 3 wheat harvests from his country. This was his quote. "Ukraine will fall out of the market for a long time. Now we are talking about 3 wheat harvests at the same time. We cannot take out last year's crop. We cannot harvest and take out the current one, and we do not particularly want to sow the next one." That's what he told Reuters. He went on to say, "My personal opinion is that the fall in the area of winter wheat in the territory under our control could be a significant percentage." So essentially what he's saying is that there's still some old crop wheat in the country. It's not moving. This new crop that's going to be harvested soon, it's probably not going anywhere. And they're going to be hesitant to plant a whole bunch of wheat this fall because of the obvious logistics concerns. So you've got, at the very least, and he's right, you've got 3 years worth of wheat crops being affected in Ukraine by this war. So this is an ongoing situation. Doesn't appear to be moving in the right direction by any means. We've got a NOPA crush report this morning. The National Oilseed Processors Association will release monthly soybean crush data this morning at 11 a.m. Central Time. Traders expect a number 175.5 million bushels for May. If realized, that would be up about a percentage point from April, up about 5% versus May of last year. This would be the largest May crush on record, I believe, if realized, if that 171.5 is realized. So keep an eye out for that number at 11 a.m. Central. This is not typically a big market mover, barring some big surprise. Soybean processors in the U.S. typically account for, of course, about half of all demand for U.S. beans, and NOPA members, I think, represent the vast majority of those processors. Rains move across South Dakota, southern Minnesota, Iowa this morning. The system's going to get into Illinois by tomorrow, I think, and then kind of break up the way that it looks. So a lot of areas of the Corn Belt, Iowa, Minnesota, Illinois, Indiana, they're going to see temps in the 90s today or again today. So this heat sticking around for most of the week. By Sunday, you're going to see areas as far north as North Dakota, Canada, up into the 90s. That's the way the forecasts look this morning. This morning's GFS run suggests potentially that some cooler temperatures or below normal temperatures arrive around the 25th 5th, which would be like a week from Saturday. That's a long ways out. I don't know if the forecasts that far out are reliable. Now, over the next 7 days, your rains become a lot more limited here. Very little rain expected for the Corn Belt, just some scattered stuff. The plains, very much dry from Texas all the way up to Canada for the most part. If this forecast shifts and we do go cooler toward the end of June and into July and the rains return, that would be a bearish factor for the market, in my opinion. Remember, we've got a 3-day weekend coming up. This is the first year that CME or the grain markets will be closed for the Juneteenth holiday. So the markets are closed Monday. So now, I believe on an annual basis, we're going to have another 3-day weekend during the summer to deal with. And these 3-day weekends, of course, are notorious for shifts in the weather models, volatility on the reopen, because you've got 3 days worth of weather models to digest, and the odds or probability of something changing during those 3 days. So just be aware of that. Your 6 to 10 and 8 to 14 still look kind of hot and dry, but again, I see some hints of potentially some cooler temperatures around the 25th, but that's a long ways out. Today is Fed Day. The Fed is likely to hike rates by 3/4 of a point today. Financial markets have almost totally discounted a 75 basis point hike to the Fed fund rate. Some people believe a full percentage point is possible. Others believe that the Fed will stick to its previous plan of a 50 basis point hike. In any case, you've had some new thoughts and ideas emerge following Friday's hotter than expected inflation print. Talk of recession is very widespread. That's something, I talk about this a lot on this channel, and I talk about it because it does have implications for the grain market, for the corn market in particular, given the direct tie to ethanol and gasoline and that sort of thing. I've talked about how ethanol stocks are really high. We're going to see another report today. If gasoline demand is reduced by any material amount, we've already got high ethanol stocks. It could result in reduced corn demand almost immediately. We're not to that point yet. We'll get another gasoline demand number here today. The cattle market was higher in live cattle, lower in feeder cattle yesterday. There was some interesting stuff in the cash cattle. Some 145 to 149 cash trade reported in the north yesterday. I'm not sure if that's going to do a whole lot to impact the markets or not, but certainly noteworthy. U.S. dollar is sharply lower this morning. The stocks are attempting a rebound. The S&P's up 18, the Dow's up 90. Bonds are up a full handle. Gold's up $15. We've got crude oil down about $1.50, 117.43 in the July WTI. Have a great day, guys. I'll talk to you tomorrow.